I'm excited about the Founders Fund because it captures everything we do at Steadyhand, encompasses all of our funds, reflects our views with respect to bond and stock markets and ultimately asset mix, and it comes with advice at a very reasonable fee. Now, more specifically, the Founders Fund is a diversified fund, which over the long term will have an asset mix of roughly 40% fixed income, 30 to 35 Canadian equities, and 25 to 30% foreign equities. Now, as the manager, I'll use our existing 5 funds to manage the asset mix. The Founders Fund is for balanced clients who have a long-term equity target between 50 and 70%. It's for clients who want someone to oversee their asset mix, keep up on their rebalancing, and from time to time make tactical moves when the market calls for it. And it's for clients who want to invest alongside me. Certainly I'll have a good portion of my personal wealth in the fund, and the fund will absolutely reflect my views on market fundamentals, valuation measures, and investor sentiment. All the things I look at when I'm deciding my asset allocation. The fund is similar to other balanced funds in that it's diversified, has a long-term mix of roughly 60% equities, 40% fixed income, and has that asset mix managed by a professional. But it's different in a whole bunch of ways. First of all, it has a way cooler name. It comes with advice at a very reasonable fee, well below other funds at 1.34%. And as far as the investing goes, first of all, the asset mix, it will stick pretty close to its long-term mix most of the time. But when we do see extremes in the market, opportunities, risks perhaps, we'll act, and we'll act boldly and decisively. As far as the asset classes, in the bond category, the fund's designed to have more corporate bonds than government bonds. Now that'll vary, but that over time should be the case. And from time to time, we'll even have some high yield or higher risk bonds when we think the risk reward makes sense. On the equity side, well, it'll reflect our undexing philosophy. All of our funds do, so it won't look very much like the index. In total, the fund will probably have about 100 stocks, maybe a few more than that. And I think if I look through that 100, you'll see probably a little more foreign than a typical balanced fund. We just find the Canadian market very limiting and really missing of any exposure to some pretty exciting industries, technology, healthcare, consumer products, for instance. I think the other thing to watch here is that we'll have more small cap than almost all other balanced funds. We're a small, nimble firm, and I think you'll see small cap stocks creep into the income fund, the equity fund, and of course, for sure, the small cap fund.